Stocks our strategists feel are poised to deliver positive returns are featured now in their top stock picks of the week.
Welcome to another edition of Zacks Top Stock Picks. I am Brian Boland, and I'm the aggressive growth stock strategist at Zacks. And I've got two top stock picks for you, and they both are reporting earnings this week, so it's pretty exciting. Let's get right to it. Our first stock is General Mills, the old General. GIS is the ticker. It's a Zacks rank number 3 right now because earnings estimates, the revisions haven't really happened here in the last 60 days. So that one's sitting there. It's a C for growth and a B for value and a slightly positive earnings ESP. This stock reports before the market opens on the 26th, which according to my math is Wednesday. I'm not good at math, though, so double check that on your own. All right, General Mills, I think we all know they make cereals, foods, also bought Blue Buffalo a few years ago, and that segment has really done well for them, so I've heard. So when you buy General Mills, you also get a nice dividend, too, 3.5%. So keep that in mind when you're thinking about if you should be buying General Mills for the print. All right, let's take a look at the earnings history. We're gonna run through these just like we would do on my aggressive growth. So we've got a beat, a very small beat of a penny, up to 10 cents, up to 13 cents. So I like the momentum on the beat side. On the absolute basis, it looks like this quarter was the strongest, but now heading back up. You can derive any of that from the hieroglyphics that I put on there. That's great. All right, so where are earnings estimates? 60 days ago, it was $1, and it has trended lower by a single penny. Next quarter, actually down as well from 115 to 113. Full year down by a penny. That's not great. And next year, down by 2 pennies. So earnings, not the greatest thing in the world, but not the worst thing either. Food prices are pretty high, so we're seeing slight contraction on the top line. And next year, we've got a 1% growth, so we're going to get that growth right back. All right, so that's General Mills. Let's take a look at the valuation. Why not? Let's do it all. 14 times earnings. There's your revenue contraction, almost 4 times book, and 1.9 times sales. Our margins, are 13% and improved over the most recent quarter. So margins move up. That's good for the stock, even if there's limited to no. Take a look at our chart. This is one of these names that should have been helped out by inflation because they can grow this stuff, but the whole market didn't like it. And now we've got some beats. Good growth in earnings lines. Like to see that. All right, that's it for General Mills. GIS is the ticker. And let's go to our next one. It's the exciting one of the two. It's Micron Technology, and the ticker symbol for that is MU. It's a Zacks rank number 2. That's a buy. A B for growth, F for value, and I love to see that because it tells me right away I'm on the right path. Big stock at $150 billion market cap, 46-cent dividend. Reports after the market close. That's what that AMC stands for. It's not AMC Theaters. AMC after the market close on the 26th, which by my math is still Wednesday. All right, a quick peek at this chart here. Chips and anything to do with chips have just soared up, but lately they've come in quite a bit. But growth in chips is probably still going to continue. Let's take a look at the numbers here. We've got a beat and a beat and a beat and a gigantic beat in the most recent quarter. Let's talk about this just for a second because this is pretty interesting. We've been losing money, calling to lose money at a loss of 27 cents, but post a gain of 42 cents. That's a dramatic switch, and that should, bring a lot of investors back into this name after losing money for a little while there. Looks like they're going to turn the ship around and do it quite quickly. So when we look at our estimates, we can see 46 cents goes up to 50 cents. 81 cents goes up to 90 cents. For the full year, we're going from 80 cents to 93 cents, kind of washing out all those losses. And then next year, we're going to go from $7 to $7.81. That is a huge move. Talk about earnings growth. That's what we like to see. All right, so earnings growth, what's driving that? Well, boy, look at this top line growth. We're going to call it 59% this year to $24.7 billion. Next year, 51%, which is also huge, to $37.3 billion. These memory chips and all this craziness with this AI is going on. Everyone's building out everything. So big growth there from Micron. We look at the chart here. We almost died in the COVID. Things came roaring back thanks to all the QEs. 2022 was the year of tech recession. And ever since then, this stock has then found its love of AI and the digital build out of AI, getting those hardware pieces together so that you can have your AI everywhere, on your phone, on your computer, on your iPad, on your whatever you got. All right, so that's Micron Technology reports after the close on Wednesday. All right, that's it for this week. Be sure to join us next week when we take a look at 2 more top stock picks for the week. Until then, why don't you go to Zacks.com/promo to check out all of our latest promotions.